Hi guys, welcome to another video. So hope you guys are rocking today. So today we'll talk about there are 4 ETFs that you can invest in. One of them, then it may be better than you buying an apartment for an rental income. So it's pretty attractive and something that I know for a really long time because I've been investing in housing market for quite a long time. But because of the liquidity problem, I will also invest in the stocks and ETFs, right? So but they're still different because investing in one house and investing the same money into a stock is pretty much different. But once you have one or couple of houses, you really don't want your whole all your money to be invested in one area because you won't need to put all the eggs in one basket. So as you may know, from Wednesday I really made an offer to a house in Toronto, but everything went south and I forgot about the land transfer tax, stuff like that. So I'm pretty mad at myself, and then I start digging out information that I knew like 10 years ago. So there's some information that I added today, and hopefully it works for you. So there are a few ETFs that you can think of, take a reference of, depending on your appetite and investment scope of your own. So the first one, I suggest you can look at the every ETF that I'm suggesting that the liquidity should be really high, so you can sell it whenever you want. Because there are some ETFs with really low turnovers, you really cannot sell or buying it, right? So it's really pretty much useless. It's just same as buying a house, because housing is really a low liquidity stuff, low liquidity asset. So buying ETF is different story. So ITB is a US listed stock, and it's really pretty much home builder stocks. Okay, so D.R. Horton, Leonard Corp is pretty much you betting on the pre-construction market going really good, going north, and then you want to invest in this stock because this is the biggest, largest asset ETFs. I cannot say that is the stock picking is good, but if in general the U.S. the U.S. economy is doing good, and people will buy a new house, decorate, or even if they're not buying anything, they renovate or flip the houses, they will really definitely benefit. The home builders stocks will be benefiting. The Home Depot is also here and knows because is really supporting a company that's supporting for new houses and decoration and home improvement, right? So let me show you the performance. Okay, as you can see now, without any words, self-explanatory, you will understand why you should invest in it. I think that the stock picking is pretty good. It's not like buying one house if you're really confident in buying, for example, in Miami and flip it and then you can earn that. It's not like that. But if the housing market is doing good, definitely it will outperform the market. By the way, it's not my shoulder here, it's the beanbag, right? Anyway, so this is the first thing that to bet on the US market is pretty good. The second one is VNQI, this ETF, Vanguard Global United States New Estate Index Fund. So this is something, look at their holdings, okay? It is global, okay? It's global. The first top holding is Sun Hung Kai Properties. If you don't know that, because there's one rich man called Li Ka-shing, right? In Hong Kong. It's he was from China, actually from Chaozhou. It's really beside my homeland, which is I'm from Fujian. Okay, so if you know that people in Singapore and Malaysia really pretty much and Taiwan speak Fujianese, right? So it's really next to that. So he came to Hong Kong and then he started all the properties, investing in those landmarks building, and then just keep on leveraging. And now he was one of the richest men in Asia. Okay, it's his empire is really good. Pretty big. So if you are betting on globally, not just Hong Kong, globally, because it's from Korea, from Japan, from Japan and US, and then most likely if you see that the top 10 is from the Asia side, and China's overseas land, this is the second biggest home builders in China, which I've been holding this stock for more than 10 years. I bought it when it was at 350. Okay, it's now 20 something. Okay, for 10 years, it's pretty good. Not like not like Tencent, Google, and Amazon, but it's pretty good for long term. So something you can invest in it. The performance is pretty good. Again, it's outperforming. It's good. It's good. Okay, it's not like the one before, because it's when the market goes cycling back, the stock will pretty much doing bad, and you're kind of putting your eggs in too many baskets, so you cannot really aim to outperform nor underperform. So something that you should think of. There's some downside and upside. Okay, the second and the third and fourth one is the most attractive. So this one is IYR. Okay, it's REIT. So it's REIT. That means they're giving out really high rental fees. Okay, so American Tower Corp, public storage, well towers, stuff like that. They really pretty much they have their assets on hand, and they have rental fees, strong rental cash flows. Okay, so they will give out dividends. So the dividend here, so the dividend is here. So they're giving out dividends once every quarter. Okay, so pretty much really good, because you have rental cash flow every quarter. Unlike buying an apartment, you will have constant cash flow every monthly. Okay, so around annually they're giving out 4 point something yield, the return for you. So 4 point something as a rental yield is pretty good. If you buy a house, you cannot really rent it out for 4% of the rental return. If you're buying an apartment, yes, you can somehow get it, but you're not without the hassle, without the documents. You can buy this representing that you're owning an apartment in the US, and then when you're short in cash, you can sell it at your own will without all the hassles on of selling this and that. And the return is and the price is pretty good, because it's not as good as those two that I showed you before, because it is you after that. Among these prices, behind that, you're still getting 4 point something % rental fee or dividend yield. Okay, so the last one is the most attractive of all. And now I know that outside there are more attractive stocks, more attractive ETFs you can invest with like that, but the liquidity is really low. Again, if the liquidity is low, I might as well just buy the house, buy an apartment, right? With the just with the documents and all the hassles. So this one is Canadian housing market, Canadian REITs. Okay, this is the second biggest ETFs that you can invest in about for the Canadian housing market. So look at the price. It's pretty good. The price is not dropping a lot. It's kind of fluctuating between 16 to 21, but if in terms of the housing market booming from the last 1 and 2 years, it really gave you a return, because it went from $16 to $20 per share. And then behind that, you are still getting 5%, more than 5% dividend yield per annum. Okay, 5% dividend without all the hassle, without the documents, without pre-approval, without without renting it, and then the furniture, appliances, and then the sewage all broken, and then you have to fix it without the management fees, without all the hassles. You get net more than 5% dividend yield, just like and even better than most of the housing market if you rent it out. And then the cash flow is monthly basis. It's monthly. Okay, it's monthly. Okay, so imagine if you're not buying house, I'm not asking you to invest that big into this ETF unless your wealth can be enough to buy 100 houses. Okay, so buying one ETF is okay, but imagine if you buy, instead of buying an apartment, if you buy this, it give you a stable 5% yield per monthly, for as a cash flow annually, 5%, and then giving you cash flow monthly. Okay, and the price is not bad. Is not bad. Okay, so the price in general, ever since the financial crisis, it went up a lot. Okay, ever since 2011, it's only $15. It's now $20-ish. So I think you can make a combination of combining the ZRE, which the BMO Bank of Montreal issued REITs, okay, with the ITB. So you can benefit from the United States and also Canadian housing market, and as well as two categories. One is the REITs for rental fee, and then also from the home builders for the housing prices going up. You can benefit from both. Okay, so that's my update. Hopefully it will help your portfolio grow a little bit more, to be more stable, and your life will be a lot happier. Okay, so investing made easy. If you have any questions, please ask me, and subscribe to my channel, like my Facebook page, and then you please like and share to your friends if they really have been investing too much in the housing market, or they cannot get a pre-approval, stuff like that. Maybe that's another option that you can invest in. Or maybe you don't have the money for the first payment. You can also invest in the ETFs that I mentioned in this video, so you won't miss out this chance of if the housing market keeps going up. Okay, so investing made easy. I will see you next time. Goodbye.